Collapse is a certainty. You can see this now particularly in Europe. My video yesterday indicated that that is absolutely the case. And today I will show you the stats that indicate this system is collapsing. And this goes for everywhere around the world. Let's take a look at this right here. This is the MSCI World Stock Index, and you can see year over year it is increasing in practically a straight line upward. And the consensus for the world 2014 GDP growth is consistently down. That's because there is a great divide, a chasm in between reality and what we are seeing. The individuals are unfortunately in more and more debt. So are the countries, the cities, the states. And you look at the stock markets, in particular the US stock market, increasing consistently. What is happening here? Well, I had recently showed you that the central banks around the world are actually given incentives in order to buy up the shares of the US stock market. And this right here is one of the major reasons why it is being propped up so high, despite the fact that the real economic indicators show a great decline occurring. Let's look at this. Houses are more expensive today than in 2006. Yes, that's right. At the peak of that bubble in the US, houses are actually, according to this, more expensive today. You can look at the whole thing for yourself. I'll just read the final line where it says, that is, to buy the 06 bubble priced house using today's mortgage finance versus the popular loans of the 06 era, the monthly payment is 24% higher and the monthly income needed to qualify 37% greater. Some things not right here. You had Fannie Mae and Freddie Mac taken over by the US government because they had all of these garbage subprime loans, and now we have a greater problem because all of that debt is now under the government's hands, and at the same time you have a population that cannot afford homes, yet the prices have risen. This is a big problem for the future of the housing market and all of the factors that go along with that, the builders, the construction, and the materials required. You can see where I'm going with that. This right here is very interesting. This is the stock market showing you how fake it really is. Look at the red line, if you can see it here. It's quite small, but that red line is the S&P 500. It opened and closed at the exact same value to the penny. That's when you know that these markets are controlled by computer programs and they simply have no semblance of reality. But of course, Jim Cramer, Bloomberg, CNBC, all of these other guys, they will not talk about the fraudulent act that continues on every single day. The high frequency trading, all the computer algorithms, they don't match up to the real economic conditions. How can it possibly open and close at the exact same value to the penny? Something isn't right here. You know it's not real. What about this though? Out of Bloomberg, they said, is the New York Fed a pushover for the big banks? Yes, of course. And here, William C. Dudley, the president of the Federal Reserve Bank in New York, said, no way. He said this, I completely stand behind the integrity and the work of our supervision staff. They are operating completely in the public interest. And I believe he made a mistake there, and what he meant to say was actually working against the public interest. That's quite obvious. When you have a $16 trillion bailout and they're only showing approximately $4 trillion on their balance sheet, you know that they are not operating within the public interest. They are not transparent at all. Everything that they do is against public interest. That is quite obvious. Now, This isn't just in the US, of course, but look at this right here. The Japanese stock exchange declining significantly recently, and you could see that happening right now at the same time that they are, admittedly, as I've covered before, printing up money to buy the shares, and still a decline. So what are they going to do? You guessed it, print more money. In my book, I talked about Greece and, of course, other countries, but this right here showing you Greece. A second round of bailouts for Greece is needed. I specifically predicted that, okay? And then I also said, despite the billions given during the first round, it just wasn't enough. And then I said, it will continue. I predicted not just a second, but a third round of the bailouts and more, of course, that will have to continue on and on. I also, at the bottom there, I want to note, I said the IMF's power will increase as the crisis worsens, and of course it has, and it did. So the reason I mention this is it's happening right now. Economically, Europe is in such big trouble, and that is going to be something that we have to see, we have to face for the next foreseeable future, that's for sure. This is interesting. BlackRock's bond head says speculators on the ECB QE making a mistake. The reason I mention this specifically is that they are worried or concerned, of course the markets are concerned about the ECB needing to get in there to really combat the stagflation, stagnation, the deflation that they are really facing right now. And the real reason that this is occurring isn't because they're not buying enough asset-backed securities. There's no shortage of that going on, I assure you. But when you have unemployment rates that are historically at near all-time highs in most of the regions, when you have unemployment rates, you have all of these factors that I've covered here before at all-time highs. This is the real reason that this is going on, not because they haven't bought enough asset-backed securities. It's a complete joke. So of course, if they continue to do more money printing, that is not, absolutely not going to fix anything. It never has, never will. European shares dip after France and Italy revise economic forecasts. This is quite interesting out of the Nasdaq. I wanted to show you this, and I'll read this first paragraph. European stocks were down slightly as France announced a delay in reaching its budget deficit target, and that's something we've heard many times before, I assure you. Italy cut its growth forecast, and investors weighed the possibility of further stimulus measures from the ECB. That's right. They consistently wait and actually depend on the money printing. Now, I want to connect this into something that you had seen historically. If you've been paying attention to this for the past few years, you'll know, and I'll go into this right here. This is the government website basically showing you here Maastricht debt as a percentage of GDP. Now what I'm talking about on this is essentially that what they had historically, what they had said is that the debt ratios need to be kept at a certain level, and of course they went far beyond that. Now when they did go far beyond that, they bailed them out and they said, look, you have to get your fiscal house in order right away. If we're going to give you the bailout money, you have to promise by such and such date you're going to get everything in order, okay? Promise everyone, okay? And of course that did not happen. You can see how they had to then delay it again. That's exactly what's going to happen. This isn't going to change. They can't get their house in order simply because the unemployment rate is so high, the debt to GDP is so high, and you have manufacturing being shipped overseas. This is a perfect storm, an economic collapse to the likes of which we have never seen before. 2008, the financial crisis, was simply a warning, a pre-warning that we are really headed for a major collapse. If you found this informative, please give me a thumbs up. That signals to me you like this information, signals to others on YouTube that they should watch it as well. And of course, subscribe to the videos. The videos are very important. If you're just watching these occasionally, I hope that you will become a subscriber and that you will also become an insider. The Insiders is where I give out all my best intel for free. That's available at themoneygps.com. Just scroll down to the bottom, fill in your email address, and you'll get occasional emails from me with good, short, concise info.